This is Nightly Business Report with Sue Herrera and Bill Griffin.
Good evening, everyone, and welcome to this special edition of Nightly Business Report. Memorial Day is, of course, the day when we honor the men and women who serve in our military.
It's also, of course, considered the unofficial start to summer, a time when thoughts turn to the beach and to vacations, and believe it or not, to the stock market and the economy as well.
Indeed, and so that is where we begin tonight with the stock market. Some investors think that as temperatures rise, they can take the summer off. But a number of market watchers say that would be a mistake, especially this year. Dominic Chu takes a look at the road ahead for stocks.
Sell in May and go away. There's been a feeling among some investors that the summer months are ones to stay away from. But recent market history doesn't look all that bad. During the weeks between Memorial Day and Labor Day, going all the way back to 1990, the S&P 500 has on average lodged just a slight loss. This year, there will be a different set of risks to watch versus what we've seen the last few years.
Any kind of inflation jump above expectations, the Fed's going to get more aggressive. It's going to put pressure on stocks. It's probably going to raise the dollar. It's going to make it harder for large cap multinationals.
Of course, there's another market cliche to think about. Bull markets like to climb a wall of worry. Risks don't necessarily mean imminent market drops. There are still reasons to be optimistic about stocks.
The economy, the world's growth is really good. That's pushing everything along. And if we continue to grow at this 3 to 5% rate in the U.S. and even faster in the emerging markets, that's a great sign. And as long as it is steady and incremental, we'll be fine.
Of course, once the summer months pass, there will be a whole new set of potential risks to the market, including those stemming from uncertainty around the midterm elections in Congress. But until then, traders will be trying to see what will set the tone for stocks, which have been stuck in neutral for the last couple of months. For Nightly Business Report, I'm Dominic Chu.
Let's take a look now at what is in the forecast for the markets and the economy in the coming months. Joining us tonight, Nancy Tengler. She's Chief Investment Officer at Heartland Financial, and John Lynch, who's Chief Investment Strategist at LPL Financial. Good to see you both, folks. Thanks for joining us tonight.
Thank you.
Nancy, it sounds like you're willing to take a flyer on some beaten down stocks this summer, yes?
Well, yeah. I mean, to Dominic's point earlier, midterm election years are great years to accumulate stocks because the volatility in the first 3 quarters is dramatic. But 12 months after, we've never seen a decline since 1946. So I like my odds here as Wall Street takes off. I'd like to pick away at some of the higher quality names that have been beaten up in this correction.
All right. So, John, if Wall Street is going to take off, as Nancy says, how about the economy? I mean, it seems to be firing on all cylinders. Will that continue?
I think so, Sue, and I think Nancy makes a very good point. You know, anytime volatility shows up, I think it'll be a great time for investors to take advantage because those moves can be justified by economic activity. We see the consumer benefiting from tax refunds. We see businesses employing not only changes from the recent tax cut, but increasing capital expenditures, and we think that's going to be a boost for the economy as well. And we're still projecting 2.5% to 3% pace of GDP for the remainder of 2018.
Nancy, let's name some names here of these companies you like. FedEx, which has seen recent weakness. 3M, which is down big this year. And Splunk.
I know. Isn't it fun to say, Bill?
It is.
Yeah, so FedEx is a name I've recommended on your air in the past. It is a company that has done all the heavy lifting from a CapEx standpoint already, big beneficiary of the tax bill, and they have raised guidance, and Wall Street's kind of yawning. They raised it in March. They're guiding above analyst expectations, and they're big beneficiaries of a robust economy and e-commerce growth. So this feels like a gift to me, and we're just picking away at it in our portfolios.
But one of the things, John, that might impact a stock like a FedEx and others would be rising fuel costs and rising oil prices. Do you expect prices to move just slightly higher near term, especially given the tensions between the U.S. and Iran, or are we going to see dramatically higher oil prices?
I lost audio.
I can jump in on that if you'd like.
Go right ahead, Nancy.
Okay. Well, this is a company that certainly hedges for higher oil costs, but I do think that as the the net new producer, marginal producer, the U.S. Has a lot more influence on oil prices than they've had in the past. And actually, stronger oil prices are not a bad thing for the economy. They're just a bit of a tax on the consumer. So we'll have to see if that slows down e-commerce, but it hasn't historically. And I think FedEx is really well poised to benefit from a growing economy. So it'll mitigate it, Sue, for sure, but I do think there are opportunities still for that company.
Last week, Nancy, we learned that the Fed was willing to allow inflation to run a little hotter than its target of 2%. Do you see it going much beyond that? And are you playing the inflation game right now, buying anything that would benefit from higher prices?
So this inflation game has been elusive, hasn't it?
Yes.
I think that, we still think that net, the consumers are beneficiaries of Amazon and online providers, and so that has kept prices pretty low. That said, I do expect to see the Fed raise rates again. I do expect to see inflation continue to pressure upward, but I don't see it dramatically moving out of whack. This is not the 70s because we have mitigating, offsetting aspects to the whole economic inflationary pressure. So we're not targeting companies that benefit from inflation. We start with valuation, and then we fill in around the gaps.
All right, I'm going to skip down to Splunk just because I want to say the word, but also because you say that you have to make sure that you've got your floaties on, which to me indicates a riskier pick, correct?
It is indeed, Sue. This is not a typical pick that I would bring. I'm a dividend-focused investor, but we also look at sales as a way of measuring valuation. This is a company that's growing sales above 30% a year in the sweet spot of data collection for websites, mobile applications, the things that Facebook is being scrutinized for. They are growing quickly in the cloud as well, and it's a company that has, while it is up 75% over the last year, the growth potential is enormous. This is a smaller holding. You buy it, you put it away for the next 3 to 5 years, and you'll be in good shape.
All right. Nancy, good to see you again. Thank you. Happy Memorial Day.
You too. Thanks, Bill.
Nancy Tengler with Heartland Financial, and we obviously had some technical difficulties with John Lynch at LPL Financial. We wish him a happy Memorial Day as well.
Well, if you got stuck in traffic this weekend, you certainly were not alone. Millions of Americans took a road trip, and as Phil LeBeau reports, the strong economy is driving people to get away.
The All-American road trip is alive and well. AAA estimates more than 41 million people traveled somewhere Memorial Day weekend, an increase of almost 5% compared to last year, and the highest number getting away for the holiday since 2005.
The economy is doing very well, and that has helped to boost consumer confidence from last year. And as consumers are more confident, they spend more. And so we see that they are investing more money in vacation, which has led to a high travel volume.
The majority of those who hit the road did it by driving somewhere. And for the first time in 4 years, many found prices at the pump at or above $3 a gallon. The surge in prices is due to oil climbing to well over $70 a barrel in recent weeks. While the spike in prices may be catching the eye of those filling up, they have not hit the point where people are canceling road trips because of the cost of gas. For a fifth straight year, airlines expected to see an increase in business for the holiday, with an estimated 3.1 million taking off.
There's no doubt that people are confident about the economy. They have a little more money in their pocketbook, and the fact that fares are a bargain right now means that people are saying, hey, let's get away for a weekend.
While the average domestic round-trip ticket for a flight this weekend was $336, airfares remain under $260 round-trip, which has prompted more to get away.
Airfares and gas prices are expected to keep rising this summer. The question is, by how much? And will that prompt Americans to cut their summer travel plans? But right now, low unemployment and high consumer confidence are combining to drive many people to want to get away. Phil LeBeau, Nightly Business Report, Chicago.
How much of an impact will rising gas prices have on travel this summer? Joining us to talk about that, Patrick DeHaan, who's Senior Petroleum Analyst at Gas Buddy. Patrick, good to see you. Thanks for joining us tonight.
Thanks for having me.
We're already, at 3.5-year highs for gasoline. How much higher do you think we go this summer?
Well, I think in the next couple of days, if not by the conclusion of, say, Tuesday, we could be looking at a national average that's $3 a gallon. We are slowly creeping up to that, and though we're talking about the first major summer driving holiday of the year, we only have 3 of them. I wouldn't expect anyone to really cut back as a result. But what you may start to see cutbacks is between those holidays. On some of those road trips, people may be staying a little closer to home.
You know, it's interesting, though, when we've had higher gas prices in the past, it often was not coupled with an economy that is as strong as it is now and an unemployment rate that is at a record low. Does that factor into the equation and make people more willing to take on that higher price, or perhaps not?
I think without a doubt it does to a certain degree. People still have to get to the jobs that they have. As you say, the unemployment rate is very low. So a lot of this demand is not going to be deterred by the fact that gas prices are hitting these multi-year highs. But what you may see is perhaps less spending as a sidetrack on these trips, perhaps one less trip out to eat or something like that, or staying closer to home. But it's going to affect the low and low mid incomes more so than anyone else. And again, I wouldn't expect a huge hit to this because the economy continues to strengthen.
What was it 10 years ago when the average was around $4 a gallon? Are we going to go back to that at some point, do you think?
I don't think that we'll get close to that at all. In fact, we'll have to see how the OPEC meeting that's happening in June shakes out. But my suspicion is that with growing pressure on President Trump, there may be some action from OPEC. You may see more oil being produced here come the middle of the summer, and that could result in prices that ease slightly. But I would expect the national average to stay in the upper $2 gallon range, or perhaps even the very low $3 gallon range.
On the other hand, though, you have a situation developing with Iran and tensions rising between the U.S. and Iran, and questions about whether they stay in the nuclear deal and their shipment of oil. How does that factor into the equation?
Well, certainly. And so far, President Trump has been very strong in what he's saying to our partners and allies about following U.S. sanctions. And so far, that message has gotten a lukewarm at best response. So that's really a wild card in all of this. If U.S. allies follow with sanctions, that could cause oil prices to rise more dramatically as we enter the summer driving season. But if Trump backs off, given the pressure already faced from higher prices, we could see gas prices back off as well. So Iran, we have to see, will others follow our sanctions?
Patrick DeHaan with Gas Buddy, always good to see you. Thank you. Have a good holiday.
And you as well.
Thank you.
Still ahead, you'll meet young entrepreneurs leaving their marks on the business world, and one that's really socking it to him. But first, Apple's CEO Tim Cook addresses the leaders of tomorrow.
Don't just accept the status quo. No big challenge has ever been solved and no lasting improvement has ever been achieved unless people dare to try something different. Dare to think different. I was lucky to learn from someone who believed this deeply. Someone who knew that changing the world starts with following a vision, not a path. He was my friend and mentor, Steve Jobs.
I vowed that as long as I'd be responsible for managing other people, I would aspire to manage compassionately. That meant pausing and being a spectator to my own thoughts, especially when getting emotional. It meant walking a mile in the other person's shoes and understanding their hopes, their fears, their strengths, and their weaknesses. And it meant doing everything within my power to set them up to be successful.
100 years ago, people with the chromosome disorder known as Down syndrome could expect to only live about 10 years. Today, they can expect to live into their 50s, perhaps longer. But the labor force participation rate for people with any disability in the United States is only about 20%. And that's one reason a young entrepreneur with Down syndrome got the bright idea to start his own business, selling socks.
Down syndrome ever hold you back?
Down syndrome never hold me back.
In fact, one might say John Cronin's disability helps push him forward. Starting his last year of high school in 2016 on New York's Long Island, John thought maybe he and his father, Mark, could start a business together.
We walked around talking about starting a food truck, But as he points out, neither of us can really cook.
Hi, everyone.
Instead, John cooked up an idea to sell socks.
I think it's fun. I think their socks are colorful, and I like being creative.
John, his whole life, had worn colorful, crazy socks. It was kind of his thing.
I like those. John Lemon.
John Lemon socks, you like those?
For about $1,000, they built a website, stocked some socks, and by December of 2016, they were online and in business, selling more than $13,000 worth of socks in a month. John delivered a lot of them himself, along with thank you notes. Going that extra mile is what John is all about.
Right away, we had people telling us all the things John couldn't do. And John has spent his life demonstrating what he could do.
John is an avid snowshoer and soccer player, so he decided to donate a portion of the company's profits to the Special Olympics, a cause that he's also lobbied Congress for.
People right away saw him as a role model. I had to wrap my head around that because he's just my son.
In February of 2017, John designed a Down syndrome awareness sock. For 2018, there's a new version.
I did blue and yellow because it down to some colors.
Now, among more than 1,700 different types of socks they sell, the flowers, the sports stars, the presidents, past and present, there are socks aimed at raising awareness of autism, breast cancer, and other causes the company is donating to, just $1 or $2 out of each sale. And somehow, John also goes to trade shows to find new products. He participated in a Massachusetts startup incubator, and he's traveled to do speaking engagements. It's been quite a year, and business hasn't been too bad either.
We shipped over 42,000 orders, and we did $1.7 million in revenue.
But this story is less about dollars and more about what makes sense. John is lucky. Most people with disabilities have few options after high school.
It's scary. The next big frontier is employment.
John's Crazy Socks has grown to employ 34 people. 16 have disabilities.
I go into the warehouse and I pull the sock and I get ready for shipping.
I learn to make new friends. I get along with everyone, and that's what makes me happy.
We want the world to see what's possible when you give someone a chance. Things are not segregated here. Everybody works side by side. And it's a better workplace because of that.
I love you, Marlon. Love you too.
One where going that extra mile comes naturally.
We have to succeed. Because if we don't, we're letting these guys down. And we have to show other businesses, you can do this too.
And so far in 2018, John's Crazy Socks is on track to top $2 million in total sales. In fact, one of his customers is former President George H.W. Bush. Mr. Bush tweeted this picture of himself wearing John's socks on World Down Syndrome Day. He also wore a pair at the funeral of his beloved wife, Barbara. The socks had images of books on them representing the former First Lady's commitment to family literacy.
So obviously, life's journeys lead us in many different directions, but sometimes it's what we learn and share with others that provides the biggest reward, even on a treasure hunt. And that's what 2 elementary school students outside of Chicago are finding ever since they got the bright idea to create a board game for a school project. It is now selling in Target stores across the country.
Wild One.
Brenna Seawers and Olivia Wazalewski couldn't have known what they'd learn about themselves when a 4th grade project turned into a board game that they would call Ship of Treasures. That was back in 2016.
1, 2, 3, 4, 5, 6. Not opening that.
It's a treasure hunt. 4 pirates hoping to avoid sharks, cannonballs, and of course, the other pirates,
Draw your cutlass.
while racing to find treasures hidden by their opponents. That November, their original school project won the grand prize at the Chicago Toy and Game Fair's Young Inventors Challenge.
I can't think of words for this.
They won trips to Target headquarters in Minneapolis and to the New York Toy Fair, as well as several grueling months of tweaking with the former president of Pressman Toys, Jeff Pinsker, all in hopes of developing a product that Target could sell.
We felt like there'd be a real appeal to this product for kids to buy something and play something that's invented by other kids. Who knows better than what's going to appeal to kids than kids themselves?
They learned to mix elements of skill, like mapping, with luck. They also tweaked colors, materials, and imagery.
The two girl pirates are modeled after us. I'm the green one, and she's I the am red one. the red.
They researched actual pirate terminology and things that happened on ships to write these cards so they would be realistic. And that wasn't something that I asked them to do. They took that extra step themselves.
That's hardly the biggest step these two have taken, however. Their community was rocked in February of 2017. Sophie Shields, a fellow student at Palos East Elementary School, lost her battle with cancer. Brenna and Olivia responded. Their game hit Target store shelves in October, and they were honored at a school assembly. And again in November, when the Toy and Game Innovation Awards named them Young Inventors of the Year. That's where they announced a portion of their royalties, about $4,000 so far, will be donated to Chicago's Lurie Children's Hospital, where Sophie Shields was treated.
It's pretty amazing. It goes to show the character and the ethics that this neighborhood really has and the connection that we have together.
It just goes to show how much power can generate just by people working together.
We decided, since she went to Lurie Children's, that we should donate to Lurie Children's in honor of her. We saw the sadness everywhere, and we just thought it would be the right thing to do. Industrial design.
Now fifth graders, these two are looking forward, even as their proud parents wonder how they can possibly grasp the lessons that they're already teaching.
That's pretty heavy for a 10, 11-year-old. I mean, she just wanted to do something. I think as she grows and as they both grow, they'll look back on this experience and think, oh, wow.
I don't think they both realize what impact they're having. I mean, this could inspire someone else to do the same thing. And if that does, great.
Ahoy, mateys!
Hearts of gold? Their most un-pirate-like gesture might be more proof the most important treasures are hidden inside of us.
And Pressman Toys has sold more than 40,000 copies of Ship of Treasures to Target. And for more on Olivia and Brenna, you can go to our website, nbr.com.
Coming up, is Hollywood getting bigger and bolder as it hunts for the next summer blockbuster? But first, what former ExxonMobil CEO and former Secretary of State told graduates of the Virginia Military Institute.
The world becomes more interconnected and global challenges require sophisticated, integrated solutions. The value of integrity only grows in importance. In every sector, integrity will be the key to unlocking high-impact technologies, new ways to conduct business, and new approaches to solve our most vexing geopolitical challenges that will make the world brighter for the generation to come.
Right now, like I did, I think of right now, you all have negative balance sheets. But you have so much upside. You all have great opportunities ahead. Don't let anyone tell you different. You live in what was, is, and always will be the land of opportunity and the greatest and most generous country in the world. Remember this, last thing. When all of you become successful, remember to give back. Give back.
What is a summer without a big box office blockbuster, or maybe two? Hollywood is getting ready for what it hopes will be a very profitable season. Julia Borston has more.
I waited a long time for a shot like this.
And the movie industry has been waiting a long time for this summer. After a dismal 2017 summer box office that fell almost 14% over the prior summer, studios are hoping Solo and other big budget franchises will power the summer box office to record sales. The 18 weeks from the beginning of May to Labor Day traditionally make up about 40% of annual box office revenue.
We're heading towards another $11 billion year in North America and perhaps another $40 billion year worldwide at the box office. But the summer is all important. It still is. It's It's still the big show, and you're going to have all these big movies in there trying to make their mark and build big box office.
And none bigger than Disney, a box office juggernaut. The media giant accounts for more than a third of the North American box office so far this year. It's released just 3 new films in 2018, including Black Panther and Avengers: Infinity War. Its box office totals bolstered by carryover from December's Star Wars: The Last Jedi release. And Disney's dominance is expected to continue. After this weekend's debut of Solo, next month Pixar is bringing back The Incredibles for a sequel, and in July, Marvel's Ant-Man and the Wasp hits theaters. Analysts predict the summer box office will be as much as 20% higher than last year's summer numbers. The CEO of the National Association of Theater Owners going so far as to say the current quarter will be, quote, gigantic. There's also a gigantic reliance on familiar franchises, with about a dozen sequels and spin-offs this summer.
Hey, Blue. You know me.
Among them, Universal's Jurassic World, Paramount's Mission Impossible Fallout, and Warner Brothers' Ocean's 8. But sequels don't always equal box office gold. 2017 saw disappointing results from such familiar fare as The Mummy, Transformers, and Alien, leading to a box office number studios don't want to see again.
We don't want to be below $4 billion. That's never a good sign. If we do that 2 years in a row, that is not good for the industry.
What do you think? Well, what do you know?
For Nightly Business Report, I'm Julia Borston in Los Angeles.
Thanks so much for joining us for this special edition of Nightly Business Report. I'm Sue Herrera.
I'm Bill Griffith. We offer a sincere thanks to the men and women of the military on this Memorial Day.